Every real estate investor knows that adding value or building from the ground up generates higher returns than just building a property and waiting for appreciation. But here's what most people don't realize. Most syndicated projects, especially large-scale developments, take 5 to 7 years to see a profit. Larger buildings take longer to get entitlements, longer to build, longer to lease and stabilize, and longer to sell. But at Gatsby, we do it differently. The traditional development model focuses on large-scale projects, 50 units, 100 units, sometimes more. These projects can deliver strong returns, but they also come with longer timelines, complex entitlements, and significant market risk. By the time you exit a 7-year project, interest rates could have shifted, the market could have cooled, or buyer demand could have changed. That's a lot of exposure for investors who are waiting years to see their capital returned. We built Gatsby around a different approach, one that delivers the benefit of ground-up development without the extended timelines and added complexity. Here's how our model works. We focus on smaller multifamily projects, typically 4 to 6 units. These aren't large apartment buildings. They're small developments designed for high-demand neighborhoods in Los Angeles. And because of their size, they move faster at every stage of the process. So what does that actually look like? First, entitlements. Large project often requires years of approvals, variances, environmental reviews, and community hearings. Our projects are built by right, meaning the zoning already allows us to build what we're planning to build. We are not asking for exceptions or waiting for city council votes. We are working within existing zoning laws. That means we can go from land acquisition to permits in months, not years. Second, construction. A 4 to 6 unit building takes significantly less time to build than a 50 or 100 unit complex. We are taking 8 to 12 months of construction instead of 3 to 4 years. Shorter construction timelines mean lower carrying costs, lower interest expense, and less exposure to market shifts during construction. Third, lease up and stabilization. When you have 4 to 6 units, you can quickly stabilize the property. You're not waiting to fill 50 or 100 apartments. You are leasing a handful of units, and once they're occupied, the property is stabilized and ready to sell. And again, that process takes months, not years. And fourth, the exit. Smaller properties have a much larger buyer pool. There are far more buyers who can afford a 4 to 6 unit building than a 50 or 100 unit complex. That means more competition at the sale, which often leads to better pricing and faster closing. So when you add it all up, our projects typically take 2 to 3 years from acquisition to sales. Compare that to 5 to 7 years for traditional large-scale developments. That's a significant difference in timeline, and it matters for many reasons. Faster timelines mean faster results. Your capital isn't locked up for half a decade. You're seeing returns in 2 to 3 years, which means you can reinvest sooner and compound your growth. Shorter timelines mean less market risk. The longer a project takes, the more exposure you have to interest rate changes, economic shifts, and market cycles. A 2 to 3 year project offers greater predictability, and smaller projects means less complexity. Fewer units, fewer moving parts, fewer things that could go wrong. That doesn't mean there is no risk, but it does mean the projects are more manageable and easier to execute consistently. This is why we have maintained a 100% profitable track record since our start in 2016. We're not chasing the biggest deals or the flashiest projects. We are focused on a strategy that works. Smaller scale developments in high demand Los Angeles neighborhoods. Built by right, executed efficiently, and sold to a deep buyer pool. And because we do a high volume of projects each year, we've built systems, relationships, and expertise that make this model repeatable. We know the neighborhoods, the contractors, and the city departments, and we know how to move projects through the process without unnecessary delays. That volume also gives us advantages that one-off developers don't have. Better pricing on materials and labor, priority scheduling with contractors, and off-market deal flow from brokers who know we can close quickly. So if you're looking at real estate development as an investment, the question isn't just about the returns. It's about the timeline, the risk, and the execution. Larger projects can work, but they come with longer timelines and more complexity. Our model is built around speed, efficiency, and consistency, which allows us to deliver strong returns in 2 to 3 years rather than 5 to 7. If you're an accredited investor and you want to learn more about how this model works, click the link in the description below, and our team will walk you through our current projects and show you exactly how we are different.